Okay, how's everybody doing? I hope everybody's had a great weekend. This is 50 pips, 10th of March, 2013. Again, we're not making any trade calls or recommendations, as you and only you are responsible for the trades you may decide to take. The fact that you're in here means you've read, you understand, you accept all the disclosure disclaimers on the site. Basically, we're performing some live technical analysis just in a learning context. So what's going on here? What can we expect to see in the week ahead? So euro, and let's start, or actually we usually start with the ES, and well, the contracts are, actually I tell you what, why don't we just look at blank charts today? Let's look at blank charts. Let's go. So what have we been talking about in terms of the ES, right? So we've been talking for this continued rotation higher into new highs, and last week we were really focused on that 1550. So a reminder, last week was the first Sunday of each month, and on the first Sunday of each month we do a live webinar, so everybody can attend. You can ask Q&As, and we pretty much do all the pairs. We review all the pairs, anything anybody has a question on. And here on these weekly updates, I'll just pick a couple of charts we'll review. So here 1550s are holding for now, and you can see even if you go back on 1 hour chart, you can see that the first time we tested it, we got some sellers coming in, but what happened? That previous resistance acted as support, and bam, we're right back up those highs, okay? So what's interesting is right now, going into the week, we have a couple of really big levels, right? The first level to the downside that we've been discussing for a long time is that 1500. We said unless we can hold below that 1500, it's very difficult for the market to get some real downside Momo. And you see we've really extended very, 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 very aggressively above that, okay? So interim, the first levels I'd be looking at is, well, 1536s, that low that was made and that held. Then we've got those 1544s, which caught a bid here, okay, as a two supports to the downside. Now to the upside, what we've been looking at is a couple of interesting confluence zones further up. So we have this first 50 back, sloppy hold of the 61.8, and what do we have? We've hit the 123 extension, and we've got the 150 extension, which is 1580s, okay, number one. And number two, we have what we called, the explosive gap up, the gap that never filled. And we can go on a 4 hour to look at this. The 50 back of the gap up into those highs, where we got the 50 back getting bought very aggressively. Bam, 123 is done too. We like that, that 150 because we had a lot of confluence of extension. And then we've got that higher level of this fib, 1575s, okay? So this whole 1575 into 1585 is a very interesting resistance zone. So if we continue to get an aggressive push higher, I'll really be looking for some possibly aggressive shorts or some good shorts to come in at that level. So that's the only real level I'm focusing to the upside. I know that the market, it would be healthy to see some kind of reversal. So I will be looking at this whole zone, 1550s into those 1575 as for signs of weakness, but I'm not really looking at it as a level I'm going to be looking to actively take shorts. I'll just be reacting, okay? Whereas on those levels to the upside, I might take some action as soon as we get into those levels, not necessarily reacting to them, okay? So that's what I'm really going to be focused on interim. But keep in mind that also triple witching week, it's going to be very difficult for the market to get a lot of downside Momo. Just in terms of it being triple witchy, you'd expect it to hold a bid tone. However, similar thing, because we've been moving aggressively for so long, don't be surprised if we get a big move down. As we've been talking about for a long time, the velocity of the moves are still to the downside, especially when we keep on grinding higher this fashion. So don't be surprised if all of a sudden you see a 20 or a 30 handle move. It doesn't necessarily mean that the uptrend is broken, okay? But you have to understand that because of where we are and because of the fact that we're grinding higher, it would be healthy to see those kind of down moves. Now, on any sharp sell-off, I would be looking at the 50 back of this move, which is coming in at 15.17s. But again, globally speaking, it still looks like we've got a bit of a grind higher, and it looks like we might have to fail from higher levels. Okay. Now, let's look at euro. Let's get a blank chart. What's going on euro? Daily chart. So we talked about the potential of retracement all the way back into the 50 back of the move off 120s into 137s, okay? And that area we were looking for was 2870s. What we liked about this is also that you had confluence with the 200-day moving average, which is starting to come up all into this support zone. And especially once we started to break below this, it looked like it continued to trade quite heavy. So this was the downside target, or the big downside support for the week. What's happening? And we tried to highlight this with the chart that's on the blog, is that we had this nice channel down which was being respected. However, you have to respect the fact that it looks like we're having a lot of trouble breaking or sustaining a good break below these previous lows that came in at this pretty much 130 level. Okay, if we were just to draw 130.00, there we go. See this first test here, even on a very, oops, sorry, didn't mean to do that. Let me get that back up. 130. On this very aggressive move down, we failed to break below, buyers coming in supporting this level, bam, and then we continued this rotation higher. And what's happened here is clearly there's been pressure on. We came in, it was defended on the first test. Second test, we broke below. We couldn't get any kind of momentum, right? Bam, closed back. This 4-hour chart very aggressively closed back at highs. We tried to take those stops out. We couldn't take them out again. We tried to rally. Sell pressure still there. Smackdown. We actually made a lower low to here, but we still defended those lows and went back all the way into those highs. Then non-farm payroll, very aggressive move down across the board. And what happened here, again, we pierced new lows yet again. However, we could not gain any kind of momentum, and the market is holding that level. So for going into the week, as long as this broader support zone holds, and I would say from a closing basis, you can't, on a daily close basis, you can't really get a close below that level. And that means below those lows, which are pretty much at the 2950s. It's going to be very difficult for the bear pair to get a lot more downside traction. And the odds would be for a possible move right back up into the scene of the crime, which is where the sell-off occurred from at those 131s. And then that is going to be a very important level because the bears are going to have to keep the pressure on if they want to break to new lows. If we break up, then most likely we'll get a move back up into those 132.90s, 133s. So really this whole 50 pip range, which you'll probably see me talking about, 130s into 129.50s, is pivotal for momentum, either to continue downside pressure. And if we go back on that daily, just a reminder, the level I would be looking at is that 128.70s, okay? Or if we hold above, move back into 31 level, and on a break higher, possibly into that 33. So this is really similar to what you'll see me draw a lot of times on the blog the arrows which signify basically this is a very big pivotal zone. Momo below or Momo above this area likely to drive the next move. Okay. What's going on cable? So we've got pressure on cable yet again, very, very aggressive move. And a lot of people have been looking for it to try and go to these 142.20s or at least into this broader zone, which is 143.30s, 144s, but basically, you know, without, because that's still some way, what they're looking at is the fact that we broke below this whole base, the fact that we broke below this trend line, signifying that the only place or the most likely place for it to go is back down to this low area. Okay. What is important here now is basically to the upside where we broke what we would call the scene of the crime, okay, which is pretty far away, but we can put it up on our chart. So if you look back on this daily, again, it's very heavy. You really have to start going into a 4-hour or a 1 hour to see a bit more of clarity here. And what's happened is that after we broke down on the gap, we fill the gap and we continue this press lower. We continue to make these lower lows, bit sloppy on the high side, but broadly speaking, the momentums kept on coming in. And here we start to have a bit of trouble, right? Where did we start to have trouble? We started to have trouble on that first break below the 150 level. We talked about that a long time, that it just seemed that it struggled to get traction below that 150. And even though here we had a couple of candle closes below right at it, it tried to rally. It couldn't get a lot of momentum either side. And here what happened again on non-farm payroll, we got bam, smackdown, okay? So if you go back on that 1 hour, what you have to focus on here is similar to Euro, what's happening with those lows? As long as these lows are defended, as long as the bids, which broadly speaking were which supported, you see these wicks? As long as the bids which supported this area are still there and we can't get a close, and especially a daily close below this level, it's going to be very difficult for the market to get more downside momentum. And what it would be healthy to see would see just to see at least a move back into that 150, which has been a pivotal level for so long. So that's the most important level. And keep in mind that if the shorts are going to keep on pressing this very aggressively, that 150 needs to be smacked down hard again. So the shorts do not want to see a close back above the 150 level. So that's the most important level to the upside. Barring which, we go back on a 4 hour, then I would not be surprised to see us moving all the way back up into not only the 152s, but potentially back up into, all the way back up into that 153 level. And it doesn't mean that the downtrend is a danger. It would just be a healthy correction in the market with some shorts taking profits. And let's do gold just to finish off, because pretty much it's the same kind of chart across the board. Let's look at gold. What's happening on gold? So we mentioned the fact that it's really all about 1600. 1600. There we go. As long as the market stays below there, it's going to be very tricky for it to rally. Now, we would expect to see sellers coming in further up, but this is what I consider to be the bull-bear line that is still in play. To the downside, and you see effectively, again, as I said before, it's effectively the same chart across the board. we've got some lows that have been put in, and it's a question of whether the market is going to take those out or not. Now, from a broader perspective, a lot of people are looking at this gold chart and saying, that's it. We've come into this structural support. This whole area has held for so long. It's holding again, and it's time for us to move back up and go all the way into those highs again. I think it's a bit too early to make that call. Clearly, if we hold here, the odds would be for some kind of a move back into at least that descending trend line. But the only thing I would caution people against is just getting too bullish, because we've got a lot of room to fall if we break below this this floor down here that's being supported, this whole 1500 to 1550s, okay? On the upside, what I would really keep an eye out on is what is happening on any kind of rally. Yeah? As long as these 1600s get sold, it's going to be tricky. If these 1600s and we start to trigger a lot of stops, don't be surprised to see a move back up into 1630s, 1640s. But keep in mind that those 1650s are going to be very, very important. So I think right here, the interim levels to have on your chart is 1650, 1600, and then 1550. And that's what I would use, or at least that's what I'm using to guide me from the weekly perspective here. We'll do more charts throughout the week. Again, I hope everybody's had a great weekend. Don't be shy about forwarding or sharing the content if you like it. Have a great weekend, and I'll see you for London Open. Have a great one. Take care, guys.